Hi. Welcome to my channel. I hope to solve CPA, accounting and finance questions from all over the world. If you are an aspiring CPA or just a person who wants to build up your accounting and finance knowledge, please consider to subscribe to my channel. It will help the channel to grow and gives me the motivation to continue with the channel. Let's cut to the chase and get started now. Unearned income. What is unearned income? It is money received for a product or service yet to be delivered. It will be a prepayment recorded as a liability in the balance sheet. The journal entries will be debit cash and credit unearned revenue or income. When the product or service is delivered, the journal entries will be debit unearned revenue or income in the balance sheet and credit revenue or income in the P&L. Now let us take a look at one CPA question that tests the concept of unearned revenue. From the question, let us now write up some journal entries. Hilda Corporation's rental agreements involved rent paid in advance monthly or annually. The journal entries to reflect this will be debit cash credit unearned revenue. Not all tenants make timely payments of their rent. This will involve the following journal entries. The first will be debit rental receivable and credit rental revenue. After the tenants had paid, the entries will then be debit cash and credit rental receivable. For tenants that paid on time for their rent, the journal entries will be debit cash and credit rental revenue. From year 3 to year 4, rental receivable decreased by $2,500. This means the following entry is affected: debit cash $2,500 and credit rental receivable $2,500. From year 3 to year 4, unearned rental increased by $11,000. This means the following entry is affected: debit cash $11,000 and credit unearned rental $11,000. We know in year 4, the company received $104,000. After journal entries A and B, there is a balance of $90,500. This balance of $90,500 will be reflected by journal entry C. Debit cash $90,500. Credit rental revenue $90,500. There you have it. The rental revenue the company should record in year 4 is $90,500.